You are listening to Let the Money Talk podcast, a podcast where our PhillipCapital's experts deconstruct world-class tactics, tools, and routines for managing your finances. I'm Rashawn, your host. Money never sleeps. Stay tuned for our experts' top tips.
Hello and good afternoon. I'm Rashawn Guan, the presenter for Pitch Media. Welcome to Let the Money Talk. Thanks for joining us. Today we have a very special guest, Mr. Quah Soon Guan. Hi, Mr. Quah. How are you?
Thank you, Roshan, for having me on the program. Hello, everyone. I'm Soon Guan, Financial Service Manager at PhillipCapital. Before I begin, my sharing is purely my personal opinion and should not be constructed as professional financial consultation advice. Today, let's discuss whether or not you should invest in gold during a recession.
Absolutely. Yeah, you're most welcome. Once again, thanks for joining us. So before we start, let's backtrack. In my opinion, it's always good to give the audience some context, right? So before we dive into investing in gold, maybe, just maybe, you could tell us about the history of gold?
Okay, gold was first used as a currency back in 560 BC, and it was easily tradable, stable, and sufficiently rare. In 1944, the Bretton Woods Agreement was signed, backing the USD to gold as well as other currencies as well. However, due to excessive US spending, the agreement was cancelled to print more money, bringing us back to current times. The dollar worth now is backed by the public trust in the government. However, if a government overprints or enter a war, its values will depreciate. Gold price, on the other hand, has actually been going up.
Just what I needed, the cherry on top. That was really insightful. Thank you. So you mentioned that the price of gold is still going up. It's always going up. Why is it still valuable?
Oh, it's because gold doesn't corrode, making it sustainable. The fact that societies and economies have placed value and trust on gold further enhance its worth. In good or bad times, gold will always have a value. The limitation is supply of gold is what drives its value.
Right. Okay. So you mentioned that it's sustainable, meaning it can last forever. And in other words, there's also trust around it, a stigma of sorts, right? Or a reputation for it, in other words. And yes, of course, supply and demand plays a key factor. So how do you think gold has fared during periods of uncertainty?
Gold has actually performed relatively well during the Great Depression, 1974 oil crisis, and most notably during Brexit. In most recessions, gold prices has even gone up.
Right, indeed, a great demonstration that gold is almighty. So let's get down to it. Could you tell us more about how gold can help us through a recession?
Number one, during a recession, gold does default, go bankrupt, or fail to fulfill its obligation, its paper promises. Number two, unlike equities, gold does not require a business to maintain its value. Hence, holding gold is imperative during an economic downturn when stocks suffer losses. Number three, gold benefits from economic distress and crisis as people avoid risky assets and feed to the safe arms of gold. This asset class thus attracts more flow, which ensure further gains. Gold is thus an ideal asset class to help your portfolio get through a recession.
Right. So let me just summarize. Number one, its price isn't on. Number two, its value is based on its own existence. Number three, gold actually benefits from economic distress. Gold is unstoppable. How much gold is considered enough or too much in one's portfolio then, Soon Guan?
Well, experts recommend a portfolio that include 2 to 10% holding of gold. For me, what's more important is to understand each asset allocation percentage and returns. After a true understanding, you can then plan accordingly.
2 to 10%. Got it. Planning is vital indeed in anything in life as well. So before investing in gold, what should somebody consider?
Okay, point one, investment goal and the amount of money you have. Check your cash flow to see how much money you can set aside to purchase gold. The money should not include your savings or emergency funds. If you like to decide on the asset that can be transformed into a gold purchase. Regardless of the goal, the most important thing is to identify the reason why you have decided to divert into a new endeavor. Investing a new asset shouldn't be done on a whim. Identify the pros and cons before allocating your resources. Point 2. Identify your time horizon. Start with the end in mind. Why do you want to buy gold and what are its returns? Point 3. Risk and returns. Never invest in what you are not willing to lose. If you are investing your hard-earned money, make sure it's worthwhile and not lose sleep over it. Lastly, remind yourself of the 5 important steps before pursuing an investment opportunity. Number 1, set a goal. Number 2, gather relevant information. Number 3, analyze the information. Number 4, develop a plan. Number 5, find a licensed advisor or institution if you need extra help.
All brilliant points. Thanks for sharing. Now, it's pretty black and white, but in your professional opinion, is gold worth investing in at all?
Although gold was formerly valued, it now has minimal purpose with just 7.5% of it being used to build technological components. In fact, gold generates lesser returns compared to the stock market. Although gold tends to rise during a market crash, you will need to time the market correctly to reap the maximum amount of gains. With that, I have finished today's sharing. I hope that it has been informative for you. Thank you and have a great day ahead. If you are looking to optimize your financial portfolio, please do not hesitate to contact me at bit.ly/ttp-QUAHSG.
Thank you so much, Soon Guan. You can follow our Phillip Wealth Advisory Facebook page at www.facebook.com/Phillip Wealth Advisory, or connect with Soon Guan on https://bit.ly/ttp-Quah SG if you have further inquiries. Stay tuned for our next episode, which will be released soon. Also, tune in on PhillipCapital's YouTube and Facebook page for Singapore's most up-to-date financial news, the Daily Morning Note, hosted by me, Rashan Gidwani. Tune in next time for more. Thank you.
Thank you very much for listening. If you enjoyed this podcast, please forward it to others. Share it on social media and leave a review. Follow this channel for other podcasts.